want to find out?
Let me know.
Okay.
Thanks.
Bye.
Another successful trade.
And?
Most people build great wealth in buying a good company at a reasonable price or a cheap stock relative to a company's cash flows or assets, and hold that and enjoy appreciation, maybe some dividends, and ultimately it gets bought out or you sell the minority interest. All I'm talking about is that there's other tools available to mitigate risks, mitigate volatility in some cases, take away real financial risks, and in some cases enhance the return too. So somebody like me who's been around for quite a while and who has experience with the different tools could look at something that you might look at something and say, wow, I wouldn't do that because it's too risky. Like, as an example, we just unwound this Peabody Coal hedged bond position. If you looked at Peabody Coal bonds, they would be, and they were priced like a high risk proposition. But if you bought those bonds and you looked over here and you saw, oh look, I can buy puts on the common shares, so basically a negative bet on the common shares for a reasonable cost. So my all-in cost is whatever. And now if the company fails, which the bond price is suggesting that it might, which it did, then that risky bond suddenly becomes an attractive piece of paper in the reorganization, because you're going to get some residual value and you're going to get full value for your insurance contract. So the net of that little package is, a 32% return instead of just owning the bonds and suffering maybe up to a 80% loss of your capital, or just speculating in the puts on their own. So option contracts on their own are speculative ventures, but when you use them as a hedge, it's a tool to reduce risk. So it's just like in commodities, you've got your farmers who actually have a crop that they want to protect the price of the crop against future changes in prices or drought or whatever, and so they use commodity contracts to hedge. But then there's other people in the marketplace who don't have a crop; they're just speculating on the future price. So you can take speculative tools and use them for conservative purposes. Does that make sense?
It does. No, it makes a lot of sense.